Are the takeaways from the data this morning different now than they seemed at first glance?
I don't think the data is really the story. I think the market's come a long way, Kelly. We've had an incredible year in stocks, and I think far superseded even some of the most bullish forecasts.
For sure.
So it's a healthy correction. I think what the Bank of Japan has done, some of the weaker data out of China, there's just a lot of things that I think are sinking in and saying maybe we shouldn't have gone that far, that fast.
You think?
That's kind of
Do you think
my
there's
view.
some hiker's remorse? Or you mean,
No,
you mean
not at the Fed.
so far
No.
so fast with the rally?
Yeah,
but
the
hikes
market
were
is just sort of like
appropriate.
we kind of got ahead of ourselves,
Yeah.
and I think we're taking a healthy break. I think at the Fed, everybody's pretty happy. I think the Fed's ecstatic about this data. I think they're ecstatic about where they sit. I think they probably, we got one more CPI before the next meeting. Assuming that's not a 0.3 or 0.4, they get to sit again. I think they're in great shape going into the end of the year.
Goldman, Steve, says they're done, that there was no September hike, which we've talked about. They say no November hike, that this is kind of it. There's not going to be the need to go again. And I don't know how much of a difference that makes when some people in the market are already talking about when the pivot and the first cuts might come early next year. It's just that's their take. This is it.
Yeah, unlike Goldman, I'm a little more humble before the future and the fates. I don't
probably wording it more strongly than they would.
Pretend to know what's going to happen. I think that they're not going to hike in September. I think the data will dictate whether or not they hike in November. I don't think they're quite ready to roll out the aircraft carrier and put on the flight jacket and get up there with the mission accomplished banner in the background. And you can see where the market is trading. I do want to just take a moment. Market may be up, market may be down, but it would always pain me to live through wonderful times and not notice it. There's a quote from the Richmond Fed put out a paper today, and I just want to read you the quote. The current cycle is the first time over the entire post-war period the FOMC has made significant progress in lowering inflation without an associated increase in the unemployment rate.
Okay.
So to the extent that David says they're ecstatic, I think they're very happy over there right now.
The movie is not over.
No.
Movie is not over.
It's been 1 year since they started hiking.
Right.
It's not even been a full year since the yield curve.
It's been 16 months.
March.
16 months. What this paper shows is that by now, in previous cycles, you would have the unemployment rate rising. And you're there. And we're going to talk tomorrow, a little tease about
this
why.
This doesn't make you nervous at all?
Of course it makes me nervous.
This, to me, feels like the mission accomplished.
Kelly, the art of the job is to sit here and be nervous but not show it at all. Of course I'm nervous. I'm just saying, to this point, it has been an extraordinary run. And if you have it, maybe this is one of those 3-hour Scorsese movies. I don't know. Or maybe it's a normal 2-hour movie and we're kind of at the end of it. Right, exactly.
I mean, there is a lot left. And the next chapter is actually being written in the markets.
Right.
Let's look at what is priced into next year. It's 140 basis points of rate cuts between DEES 2023 and DEES 2024. That's the spread between the SOFR rates. 140.
Yeah.
And that's what the market is pricing in. So that's feeding into equity valuations, that's feeding into spreads. I think the market's got a lot more optimism than the Fed. The Fed is far more cautious, far more nervous, far more, as Steve said, this is not wave out the banner time. This is not mission accomplished time. And there's no, we're done, we're great. I don't think they're saying that at all anytime soon. I think they're behind the scenes. They're super happy.
No, and
they're not going to wave that flag.
Well, I would acknowledge
the FOMC held a secret meeting today, and they raised rates. It's true. What happened today is that rates got more restrictive. The inflation rate came down, and the real funds rate went up today. Obviously, they didn't have a secret meeting. Stop with your Twitter nonsense over there. But here's what happened. And this is the plan the Fed has in place. I guess you could call it a slow boil, and I'll let David address the equity aspect of that. But let's say inflation does continue this trajectory. Guys, I have those two big numbers in the back. I want to show you where we're at on a 3-month average annual basis. And these are very good numbers. We're 3% on the core, 1.9% on the headline. These are great numbers. If they continue like this and continue downward trajectory, what's going to happen is the Fed is going to become increasingly restrictive over time. And this will help in this inflation fight. It's like pouring additional water on that fire to make sure that it's out. And the Fed seems to have the market convinced. that it will be in this high range for a while. I get, David, the first rate cut built in March or February, or March or April of next year, where it's a 50% or higher. And so for 7 months, they've got the market, at least at this point, on board with that growing restrictiveness of policy.